I woke up this morning and my office was flooded. So that was one thing. So I raced over to our other office and got set up here. Now technology doesn't work. So it's just one of those manic Mondays that we all just kind of roll up our sleeves and hope we can just get through. So let me just go on real fast and I'll give you a quick update. So this last week and a half has actually been quite good for interest rates. When I say quite good, I mean, it's been better than it has been. We saw a little bit of inflation fears kind of creep in, but it's temporary inflation. So it's been actually quite nice to see that it's temporary. So the markets really love that. And because it's not as bad of a problem of inflation as possible, then they're looking more at the futures. So the bond market rallied a little bit last week. So because I'm not on my computer, I'm trying to pull up somebody else's computer, my chart, so I can show you that, but I may not be able to do it from here just because it's encrypted to my IP address. So anyhow, make a long story short, mortgage rates are in the low 3s, almost into the 2s without too much cost. So that's really exciting. Today we saw a little bit of a reaction towards the negative, but it's just because we bounced up against what's called a level of resistance. I'm going to try to get this up on my computer now. Hold on one second. Gosh, you gotta love technology. Sometimes that's the best thing ever, but otherwise it's just, sometimes it can be just a bear. All right, so the most important thing about today that I just want to kind of show you is rates are getting a little bit better there. It's actually a really good time to lock in the next couple of days. If you have buyers that are looking to that are under contract right now, it's a great time to lock. I'm probably going to be locking most of my loans in tomorrow that I have that are open that are not locked, just based on what's happening with the markets. But as we know, all of the temporary inflation is based on the supply as far as products. The supply chain is still just wrecked. So as soon as that clears up, I think we're going to see rates come back down. But until then, we're kind of stuck in a weird little rut. But rates are still really, really good. So that's a really, really good thing. So today I wanted to really focus on how to teach you how to help your buyers shop for loans properly. So I'm going to share. I can't share my screen. That's sneaky. Okay. God, I love technology. But first off, I want to make sure that you know the tools that we have to help your buyers through the process so that they know how to shop and why it's very important to choose a loan officer that knows these things. So first off, I wanted to give you guys some questions to ask for the buyers. I'm going to pretend you guys are buyers. So most lenders have the ability to pull credit and give you an idea of what your credit scores are and tell you maybe what you can or cannot do, but not all of them will actually fix your credit and dive into that credit for you. So the first thing I want you guys to ask your buyers, or if you are a buyer, is your lender going to help you optimize your credit score? Because not only will we can get you a better score, that'll get you a better rate. So if you've got like a credit score between like 729 and 735, you can get probably a quarter discount point better in pricing if you get to that 740. So we take upon our team and we actually jump in and do that for our customers to help them get the better rate as well. Also, something to ask your customers is, does their lender work after hours and on weekends? And that's important because, as you know, in this market, it is extremely important to be able to get a hold of your lender to update pre-quals and to get those out to borrowers over the weekend to get those offers in, because sometimes they're not accepting any more offers after a certain amount of time and you need that to be done. So make sure you ask them, are they available on the weekends? Another big one is, what does your lender do and what position or role do they take in the offer process? So make sure they're asking their lender, do you reach out and contact the listing agent to help my offer go through? That is a big plus when making an offer, that the lender is part of that conversation, because we want to make sure that everyone is truly involved and all questions are answered that the listing agent may have regarding the strength of the buyer. And they'll ask me things that they would not typically ask the buyer's agent. Another thing is getting appraisal waivers before you make the offer, or do they even offer them? A lot of banks don't offer appraisal waivers. So make sure that that's a question that they ask. And again, getting them done ahead of time before you make the offer gives you that really upper hand to know exactly what you need what your buyers are going to need to bring to the table. Can we lock our rate prior to finding a home? So yes, this is a really neat tool that we have. Once you're approved through our True Approve program, you can actually lock your interest rate in before. Now, in a raising interest rate environment, this is a very big tool. However, it does expire. It only lasts about 60 days. That's the lock term that's based on these locks. So you would have to find your home and close within that 60-day period from the time we lock. So can we lock our rate prior to finding a home? Make sure they're asking that. And how much time do they need to close on a home loan transaction? That's very, very important, especially if they have a pre-qualification from a bank, because banks can be very, very, well, let's just say they're banks. Can I get a written quote? A lot of times they won't give you a quote. Brokers, for sometimes they don't like to give quotes. Banks can be very slow in getting quotes out. So make sure they get a written quote so they can properly shop. The two things that the buyers need to look for are the rate and the lender fees. All other fees associated with that will be the same regardless of what lender they use. So title, escrow, insurance, that'll all be the same. So a lot of times lenders will go in really skinny on those numbers and have their numbers accurate, but then it looks like they're better overall because they're kind of cheating the system by saying the title and escrow fees or everything else is really, really minuscule and very, very small as far as the fees that are on that estimate. So that's kind of cheating, but banks do it all the time. And that's really kind of frustrating from a lender's point. So we want to make sure that they understand what items to actually look at. Just the rate and the points and the lender fees is all they have to look at when shopping for a mortgage. One of the best things that a buyer can ask their lender is how and why do rates fluctuate? So this is very important because if a lender can't tell the buyer how the rates move and why, they're not going to be able to lock them in at the perfect time to get the best rate. Kind of like looking at different stocks and knowing what's happening, what the trends are to be able to lock in and buy stock at the lowest possible price. Kind of the same with mortgage rates. So make sure they're asking me how and why do rates fluctuate? If they don't answer that correctly, I would have them just run away from that lender because I could probably save a quarter or an eighth in rate just by timing the lock properly. What are your closing costs? We kind of talked about that. The closing costs are for the lender only, not the rest. So just the lender's fees and that rate is all they need to shop, and make sure they're doing it at the same time. Buyers are not, or they should never call different lenders and shop their rate on different days or even different weeks, because they will always get a different rate. And it could be a very big difference because of market moves. So if you're a buyer, I would say, okay, when you're shopping, make sure you're doing it on the same day within the same 3 to 4 hours, because the markets can move and rates could be different. You might get a quote from me in the morning at 4.25, and also the bond market rallies and now it's at 4. I mean, those rates aren't relevant to right now, but that could happen in the same day, and another lender could look better, but it's just because the market moved. So make sure when I tell buyers how to shop, I make sure they're doing it at the same time of day, because that's very, very important. They also need to know what APR means. So APR is not the rate at which the interest accrues at. APR is a representation of the total fees that loan has associated with the loan itself to acquire a loan. So escrow fees are part of it, title fees are part of it, the lender fees are part of it, and any points are a part of it. So you can flub those numbers all day long in a pre-qualification upfront or in a quote unquote estimate for the buyer. So they need to know that. That's why it's really important to just look at the lender fees and the note rate when shopping, and that's it. It's the only things you need to look at. Also, it's important, especially with online lenders, look up the reviews for that loan officer and the company. It really doesn't matter much, the company nowadays, as much as it does the actual loan officer. You can have a very good mortgage company that has just a really mediocre or poor or lousy loan officer. And the opposite is true. You can have a lousy mortgage company with just a phenomenal loan officer. So making sure that they're looking at the reviews for the company and for the loan officer individually is extremely important. So those online reviews for the loan officer, I would say are more important than the actual company, but it is very, very important for them to look at just that loan officer and not the company as a whole. But yeah, definitely look at the loan officer itself. And another big question that a lot of buyers really like is, do you service your loans? Most brokers do not. They usually sell them. Why would a good loan officer work for a poor company? That's a good question. Usually they won't, but some they just do because they're stuck there for some reason. Who knows? But you could have a company like, I won't, let's just name a name out there, like Quicken. Let's just throw that out because they're huge, right? Quicken has a lot of reputations for being bad or being slow, or sometimes being really good with some loans and not others. It's just a really mixed bag. So you could have a really good up and coming loan officer that's there, that's really, really good, that somebody might have as their best friend, and it may go well. But overall, the company doesn't have a good overall, what's the word, reputation in the markets for being consistent. So that's why you look at the loan officer itself. That's kind of where I was kind of leading in regards to sometimes it's a bad company, but a good loan officer. But servicing loans is very important, especially for a consumer, because it's really frustrating having a loan that gets sold multiple times a year. You have to change your bill pay, you have to change all of these things. When you service a loan, I'm the actual contact for the entire loan itself. So we do not sell our conventional FHA and VA loans. So asking if they service their loans will open up more flexibility for them and the ability to monitor their loan a little bit more specifically as far as like opportunities to refinance, etc. So it's always good to service the loan. So on the reviews, do you service the loan? And what is the best loan strategy for me? A lot of people aren't loan strategists. They just they just give the borrowers what they ask. Or not even that, they just give the borrowers the 30-year fix without even asking. So asking the loan officer what the best strategy is for them will really shed some light on what the knowledge is of that loan officer. Because if they say, well, what do you mean? That's a bad answer. If they say, well, how long are you planning on living in this house? Do you plan on paying the loan off quickly? I notice you have a house over here you're selling. Do you want to use that money to lower your principal and maybe recast your loan? Or when are you retiring? Are you retiring in 10, 15, 20 years? Maybe we'll lower that term to match your retirement age. So a lot of different strategies that we can come into place. If they don't know a good strategy, or if they don't explain one, then I would run very quickly from them. And in a previous little breakdown, Monday morning mortgage message, I talked about the different types of lenders: brokers, bankers, credit unions, and banks. You're going to get a much stronger, more knowledgeable loan officer if they're at a mortgage banking firm. Sometimes mortgage brokers, but mortgage brokers, they don't service them. They just originate the loan and ship it off to a wholesaler. And that can add a lot of different uneasy question marks to timelines, to the ability to rush things, etc. So brokers, they may be great in being able to offer unique options, but being a mortgage banker like myself, we actually have a big broker side as well that we can utilize, so we can have the best of both worlds. But if you were looking at just teaching your buyers how to shop for a mortgage, these questions, I'm going to send these all to you, are very, very important. Another one is, how long have you been a loan officer? A lot of people just think, oh, they're with US Bank, they're going to be great. Or, oh, they're with Wells Fargo, I bank with them, they're going to be great. But that loan officer controls the whole transaction. They are the driver of the formula car. The formula car might be great, but if that driver's not experienced, he's going to crash into the walls left and right. So make sure they're asking how long the loan officer's been in business, and then what kind of a lender that they are. Another one, do you fully underwrite your pre-approvals, or do you even run them automated up front, or do you just kind of wing it? So a lot of loan officers don't even know how to run a loan through Desktop Underwriter or a Loan Prospector, which is the automated underwriting approvals. They don't know how to do that. You'd be surprised, believe me. And they don't do that usually till the loan's in contract and later on through the process. And it costs money to do that. So a lot of lenders just don't do it. Well, you could have a loan that's on the edge. And if they don't run that up front, it's scary. So I would not trust them. So making sure they're underwriting it upfront fully, or at least running it automated, is a big question that they need to ask their loan officer. Let's see some other questions. We talked about the FICO boost and what role you take in the offer process. So a lot of it is just being available and having the knowledge. But these questions on how to shop an interest rate, when to do it, how to do it right, the questions to ask a loan officer on timing the lock, what kind of mortgage company they work for. I'm going to send this list to everybody so you guys can have this little list. I'm starting to send this out to every single one of my buyers that are out there that are shopping for loans, because it will open their eyes to how to do it right. The last thing you want to get stuck with is a loan officer that doesn't know what they're doing. And that could be really scary for you. So I apologize. I couldn't do the full depth of the Zoom call. It would not connect to anything on my Zoom for audio, or it just wouldn't connect. So there's all these errors popping up everywhere. So I apologize for that today. But any questions on how to shop for a loan, or any questions regarding different mortgage companies and how they work, don't be shy.
I just wanted to find out exactly where are interest rates today? I know it's not what you're asking, but.
Sure. Yeah, let me jump in real fast somewhere, and I'll share my screen. Let's get in here, go back into Zoom, share screen, share. All right, so here's an idea of where the average on rates are. This is the Mortgage News Daily, which is a great overview of where current interest rates are. So we have the daily mortgage survey. This is all lenders throughout the United States. The average rate with no points is at 3.12. So that is a standard 30-year conventional loan. Look at FHA though, 2.625. So as you can see, they're trickled down. This last week was a very good week. So super excited there. Let's see if I can actually show you some market data. Market data, MBS prices. Yeah, so here we go. See this stretch upward? That's a good sign. That is a really good sign for mortgage-backed securities. So anytime we have a roll like that, when mortgage bonds get better, so do rates. So this last 2 weeks has been a very, very exciting couple weeks, just to help with the overall scheme of the mortgage-backed securities in the bond markets. So let's just look at the 3.0. See this little break up where we were on a big skid, and then kind of we came back upwards. So it's been a good couple weeks. So very, very thankful for that. Let's go back to rates so I can kind of show you that again. Jumbo, you can see, is almost in line with conventional 30-year fixed rates. Now, this is today, the red, that shows what's going on right now. This is based on the last date close of business. So we're down a little bit, but the overall gains that we've had the last couple of weeks has been very nice. ARMs, adjustable rate mortgages, are out there, but they're not really too much better than a standard 30-year fixed, but they are out there, and they're for those people that know that they're only going to be in that house 3 to 5 years. Even if you stay in a house 7 years, you still have an overall gain because of the 5 years of savings you had at a lower rate. But people just have a bad stigma in regards to adjustable rate mortgages. So we try to coach them on it and see if it fits. But look at this guy, 15 years, still in the mid twos. So rates had a very good run this last couple of weeks. So thumbs up for that. That's always an exciting thing for our industry. So any questions?
Awesome.
What's that?
Thank you. Awesome. Thank you.
Yeah, you're very welcome. Any other questions in regards to interest rates and kind of what's happening in the markets?
I have a fast question.
Sure.
This is Rick Hill. I have a question. A lot of these we can use as listing agents to vet the buyers.
Yes.
Yeah, so that's really great. I mean, the ones like, how long have you been a loan officer? Do you work weekends? Do you do underwriting, right? Underwriting approval?
Exactly.
So
yeah,
okay.
It's for you as well. Absolutely. And these are questions that not a lot of people ask. I mean, they just assume that, hey, if they're a referral, or if they have somebody that works at a big bank, that they're just going to be rock solid, just as solid as the bank might be. And that's just not the case. Most loan officers start in banks, credit unions, or Quickens or stuff like that. That's where they start. That's where they get their foot in the door. They kind of figure out the systems. They make a lot of mistakes. They learn from those mistakes, and then they move on to have their own business as a mortgage banker would. So you have to vet them out and really get to know who they're dealing with. And these questions will really help you guys out. So I'll make sure this is sent to everybody. And you'll have this full list. And each of the items on there has an explanation of each question and how they should answer. So it's a pretty comprehensive little breakdown.
Sean, I have a question.
Sure.
Will you contact, I know you'll contact the listing agents. How about for sale by owners? If we have a buyer that's making an offer on a FSBO, because right now, the way inventory is, we're all, or many are contacting and trying to, go to that market to find, homes for our buyers.
Sure. Yeah, I mean, I'll call anybody. If you have a number of somebody, my job is to help protect your paycheck. So anything I can do to help you make sure your buyer is properly set up, properly pre-approved, and that the seller knows exactly how strong your buyer is, that's part of my job as well, not just getting the loan done. So when you have somebody that's a for sale by owner and you have the seller's number, give it to me. I'll call them. I'll let them know who I am. I'll let them know the strength of their buyer so that they can feel comfortable. I mean, they are truly the listing agent, so to speak, even though they're not agents, for the transaction. So absolutely, I'll do anything. I'll call anybody for you guys. If it's the brother of the listing agent who's a loan officer, I've had it all. I've called the most unique people ever, financial planners that are best friends of the listing agent that know more about mortgage than them. I've seen and heard of all this market. So whoever you want me to call, I am not shy, and I will jump out and make that call for you.
Thank you.
You got it. So interest rates continue to be good. I do think we may see a little bump up, but then I think we're gonna have a nice rally towards the end of the summer as well. So I think the bump up in interest rates that we had was shorter than I expected. So, and I think shorter than everyone else expected. The markets just aren't as strong as we anticipated. With the overall inflation being temporary, that helped a lot. And then now it's just a matter of trying to find those houses for our buyers. It's interesting out there, guys. A lot of builders right now are building homes, but they're not selling them. They're turning them into rentals. So we've got, let's see, D.R. Horton is doing it. Taylor Morrison is doing it. There's big hedge fund companies that last year, they bought 80,000 homes just to rent them. So we've got a lot of competition for those that want to buy owner occupied homes. And that's adding the fuel to the fire. So this isn't something that happened just overnight. This is like a 2 to 3 year, and even longer than that, process that's happened to limit the amount of inventory out there. Back in 08, 9, 10, 11, because builders weren't really building as much as they should have been at that time because of the markets. That's also a big problem that's caused our inventory issue. But so get out there, get your gloves on, go knock it down, knock them dead. And I'll be here to support you through it. And maybe I'll get my computer to work now that I don't need it to work. So anyhow, you guys have a wonderful day. And if you need anything, feel free to call me.
Thanks, Sean.
Thank
You got it,
you.
guys. Have a great week.
Thanks, Sean.
All right. See you guys.
Thank you.
Thank you. Bye.
You got it.
Thank you. Bye.
You're very welcome. We'll talk to you guys soon.